All right, everyone, welcome to the Game Changers Show. I'm your host, Mike McKay, and this week on the show, we have Vina Jetty. Vina, welcome to the show.
Hi, thanks for having me. I'm excited to be here.
Yeah, absolutely. So, for the people who don't know you yet, can you just
Yeah.
share a little bit about how you got into the real estate business and how that's
Yeah,
led you where you are today?
absolutely. So, for those of you that don't know me, I'm Vina Jetty. I am a large multifamily owner operator. I'm also an investor, a philanthropist, a mom, a wife, all the titles. But I didn't start in multifamily. So, I've done over $1 billion of multifamily transactions in my own portfolio. But I started in the single family space. And actually, if we rewind before that, I graduated from the University of Illinois in Chicago with my degree when I was 20 years old in finance. My mom is a successful single family investor. And when I graduated from college, she was like, great, now you can come work for the family business. And, I'm sure she had all these dreams of mother daughter duo. And, I was 20. So I was like, Mom, I'm an adult with a degree. I am not coming to work for you. And, my mom being the good, strong, supportive mother that she is, she was like, all right, baby bird, and pushed me out of the nest and was like, go fly. And so I was like, I'm going to do something totally different and revolutionary. And then went and worked in corporate America for some of the largest real estate firms, making a
Mhm,
bunch of money for other people and not for myself. And then
mhm,
fast forward to 2012 and my now husband, but at that time we got married. And that was my first year paying taxes as two married W 2 earners.
mhm,
And spoiler alert, the IRS is not very friendly to employees. The IRS is very friendly to investors and business owners. So called my mom back up and said, Mom, I just paid $200,000 in taxes. And she said, well, first of all, congratulations, because if you paid that much in taxes, it means you made more money than that and you're not doing so bad. There are worse problems to have. But the second thing that she said to me was, quit your job. And I was like, what? I was working at Tishman Speyer. They're a multi-billion-dollar real estate firm. And she's like, yeah, quit your job. I was like, my stable job that I have at one of the world's largest investment companies. She's like, yeah, because the IRS is never going to reward you for being their employee. The IRS is going to reward you for creating value in the economy.
mhm.
And so I said, all right, well, what's the worst that can happen? Which every time I've said that to myself, it turns out that those are famous last words. Everything can possibly go wrong. But what I've learned through it is life goes on and you figure it out and you pivot and you grow and you learn and you move on. So it's okay that things go wrong. You should expect things to go wrong because they will. But anyway,
Mhm.
so started investing in single family when I quit my W 2 and then quickly realized you can't really get to scale with single family. It's not possible to get to the level of scale that I wanted to be at to do that
Mhm.
with single family. And so I quickly realized that multifamily was the way to go. So a little over a decade ago, I started investing in multifamily and raising capital. And, fast forward to now, and we've crossed the $1 billion mark. And I'm very proud of what we've done, and we continue to grow.
Yeah. So when you first decided to make that switch, right, like
Yeah.
what was the first step that you took to switch from single family to multifamily?
Honestly, it was a little bit accidental in a way. I wish it was more intentional and I like had this one moment of clarity when I knew, but it really wasn't like that. It was a lot more boring and a lot less Lifetime movie than that. So the way that looked was there was a week where I put 5 houses under contract.
Mhm.
And I thought about it and I'm like, doing all the math and I'm like, I can never own 1,000 or 10,000 or 100,000 units like Blackstone or Starwood or some of the larger investors. And so it was at that time I realized I needed to get into the commercial side for scale, but I liked the residential side. I like the idea of investing into somebody's home. I like the idea of revitalizing a community and providing a safe place for families to live, somewhere that's clean for children to come home to. Like all of that felt really important to me. It felt like meaningful work. And so that's when I realized I probably needed to be in multifamily, because it gave me the ability to maintain the residential side that I loved so much, but it
Mhm.
also gave me the ability to reach the scale that I was looking for through commercial. So multifamily was kind of the perfect marriage between scale and the
Mhm.
investment thesis. And so then I had a friend of mine. He's technically a competitor, but he's a good friend of mine. We co-invest in each other's deals. He reached out and said, "Hey, I have a 200 unit in Dallas, which is where I happen to live.
Mhm.
And do you want to buy it? It's $15.9 million, 5-year hold, et cetera." And I was like, what could go wrong? Again, everything can go wrong, but we figured it out and we were able to deliver like a 24% IRR to our investors over the course of 3 years. And once you get bitten by the bug, it's very hard to see any other path as being exciting or viable once you're on the commercial side.
So you said like everything couldn't go wrong and did go wrong, but
Oh,
obviously you
yeah.
guys were able to work your way out. What are
Yeah.
some things that went wrong in that deal to solve?
What are some of the things that went wrong? Well, for starters, I didn't know anything about multifamily. So, the term fake it till you make it, I was really,
Mhm.
really, really faking it and just hoping that I would make it at the other end of it. And so,
Mhm.
first, I'll tell you a story about how little I actually knew. So, I had an investor, I had to raise $1.2 million.
Okay.
And when you're first starting out, everybody's like, "Oh my gosh, that's amazing. I want to support you. Come back to me when you have your second deal or your third deal," right? They want proof of concept because they're excited for you because they care about you personally. You have a relationship, but they don't care about you personally enough to risk their dollars on you, right? And so I remember thinking every time I heard that rejection, and it was so many times, I was like, well, if you don't give me a chance on my first, how am I ever going to come back to you with my second or third or fourth? And I had this investor that called me. He was super nice. And he goes, um, "So are you raising debt or equity on this deal?" Okay. This is like so embarrassing to say now because I know so much more, but I'm just like cringing when I think back to it. So he says, "Are you raising debt or equity?" And I remember being like, I don't know. I don't know what the answer is because I don't like I knew what the difference was, but I didn't know from an investor application what the difference was. And so I was like,
Mhm.
okay, Nina, you have a 50-50 chance of getting this right. So you're going to take a swing. Okay. You're going to guess. And then you're going to go reconfirm it. And then, if you guessed the wrong way, you'll have to go back and like have egg on your face and try to clean it up, whatever. So I take a guess. And by the way, I'm raising equity. Like today, I know this for sure. I'm raising
Yeah.
equity. And I'm like, we're raising debt. And I pick the wrong choice 50-50 shot and I miss. And so I'm like, we're raising debt. And he was like, oh, really? That's interesting. It's structured more like equity. And I'm like, huh. Is it? I don't know. I don't know how to structure equity. I don't know how to structure debt, right? And so I went back to our analyst and confirmed that we were in fact raising equity, not debt. And so I ended that conversation saying, "Hey, I think we're raising debt, but let me just double check with my partner who structures our capital, right? And I don't want to give you the wrong information." We went back and forth a lot. We hadn't quite finalized it, so I just want to make sure I'm not getting deal merge. And then I went, confirmed that I was in fact wrong. And I came back to him and I said, "Hey, by the way, I'm so glad that I went and checked on this because we ultimately ended up going with an equity raise, not a debt raise." He's like, oh, "Okay, yeah, that makes sense." And I'm like, dodged a bullet there. He did not end up investing, which to be fair, I probably wouldn't have either. But it was a good rep for me to learn, right? Because then the second time someone asked me that question, I was like, oh, we're raising equity, and it builds that confidence. Those reps build that kind of confidence for you. So that was like one of many things that went wrong. I spent 6 weeks straight crying myself to sleep because I thought I wasn't going to be able to raise the funds. I thought all the earnest money that we had put
Hmm.
up was going to get taken by the seller because it was hard money day one. Um, there was no way for us to get that back. It was our earnest money deposit, and it was stressful. I thought I put my family into financial ruin. We had like $200,000 hard, and back then for us that was a substantial amount of money, and I needed $1.2 million dollars, and I didn't have that personally that I could have just put in. And so it was a labor of love. A lot of blood, sweat, and tears went into that raise.
What do you think ultimately allowed you to raise that money, even though it was something that you had never done before?
Stupidity and probably overconfidence, to be honest. You know what it is? It's when you see people talking about raising capital, like even now, as I'm talking about raising this capital, and I tell
Mhm.
you, look, raised over $400 million on an asset we bought just 2 years ago. We raised $67 million, right? So we have raised a significant amount of capital. And when I talk about raising capital today, it seems like it's really easy to do. And
Mhm.
everybody thinks that, oh, I have the best network. They're going to invest with me. This person said they were going to put in all this money, and that person. So you go into these raises thinking you have the best product. You obviously love the deal. Otherwise, you wouldn't be putting your name, or, well, hopefully, you wouldn't put your name or reputation on it. And then
Mhm.
what ends up happening is you go out to raise the capital. And especially when it's like your first or your second one, and you go, oh, all the people that said that they were willing to throw money at me and hand me checks are all of a sudden nowhere to be found. And
Mm.
then you're like, wait a second, how am I going to do this? So honestly, I didn't know if I was going to be able to do it. But what I did know is if I didn't try, I definitely wouldn't be able to do it.
Mm.
And the way I overcame a lot of those beginning hurdles was honestly pure will and grit. And I
Mhm.
just pushed through. And it was hard. It was really hard. I was nervous. I was scared. I was anxious. It was all this negativity. But once I actually accomplished and like checked off the mark of that goal, everything
Mhm.
changed because now for the second raise, I already had investors that were getting paid. I already knew how to talk to investors. I knew what questions they were going to ask me before they asked me them so I could be better prepared. I knew better ways to do things than we had done the first time. I had systems now established. I had processes in place that I didn't have before because
Mhm.
I just didn't even know. And so
Yeah.
I would say if you're just starting out, don't compare your chapter 1 to somebody else's chapter 20 and overestimate what you're able to do. So when a new investor tells me like, "Oh, I can raise $1 million confidently," in my mind I automatically go, "Okay, so that's probably about $200,000 is realistically what they're going to be able to raise." Because you always
Mhm.
think you can raise more than you actually can when you first start out, especially.
Yeah. So let's talk about raising money today, right? Because obviously there's been a lot of challenges that have happened in the multifamily space. And I know I've spoken to a lot of operators who said it's taking them longer to raise funds than it did 3 years ago, right?
Yes.
So how has that been for you guys recently?
Yeah. This is par for the course right now. This is absolutely what I'm seeing. So maybe like 5 years ago, I only had about like a 30% attrition rate, meaning if I needed
Mhm.
$1 million, I would get commitments of 1.3 million, and then that will get me the $1 million or pretty close to it. So that was how we used to estimate before. Then in 2022, 2023, when interest rates started spiking and liquidity became more scarce, we started raising about 50% more. So if I need $1 million, I'm getting commitments of about 1.5, knowing that there's going to be enough attrition that it's going to end up around a million. Today,
Mhm.
I would say we're almost at like 70% attrition on our deal. So if I need $1 million,
Okay.
I'm actually getting commitment of about 1.7 million. Probably not quite as high for us because our investors are repeat investors. They know us, we have established relationships. But this is what I am advising any of our like mentorship people or like community members. I'm telling them about 70% more is where they should be aiming to get right within the range that they're comfortable at. But yeah, it's much
Mhm.
harder. Investors, especially retail investors, they are more scared. So when they get burned once, and it doesn't matter if it's by you or
Mhm.
another operator, and it doesn't really matter what the reason is. It doesn't matter if it was straight up fraud. It doesn't matter if it was operational. It doesn't matter if it was market driven. It doesn't matter. If they have a negative experience, and by negative experience, I don't mean losing money. Like that's obviously one extreme of the
Mhm.
negative experience. But I mean, even in between that, right? If they had a sponsor that didn't pay distributions or didn't communicate or didn't get a K1 to them in time. At this point of the market cycle, they're like, I'm out. This is not for me. Um, and I'll also say, as an
Mhm.
experienced operator now, I don't want investors that are highly emotionally triggered in our deals as retail investors because
Sure.
when the rubber meets the road,
Yeah.
investors that are highly emotionally triggered lose all sight of professionalism. They lose all sight of what the goal is. They lose all sight of all the things that we told them. We disclosed the risks to you ahead of time. We told you that all these things could happen. We gave you all that information and you still made the decision to invest. And if things aren't going the way that we had planned, then all of a sudden you're emotionally triggered by it. Like, I have a friend who raised capital for his deal, and one of the investors, and one of the deals is they did a capital call because they needed to extend the rate cap. This is a
Mhm.
very common story. It's like when people tell me this, I always say it's not a reflection of the operator, it's a reflection of the market cycle and lending structures that were in place that made sense, right? And so
Mhm.
when he went out and talked to this investor was like crying to him. And she said, I have cancer and I sold my house and I put all of my money into this deal. And he goes, what do you mean you put all of your money into this deal? She said, this is my entire retirement. This is all the money I have. And now I have like this terminal diagnosis. And now what? Like now what's going to happen to me? I'm going to be homeless. I'm going to be out on the street, whatever. And I'm like, oh my gosh, this is horrible. But the reality is you're an accredited investor. You shouldn't be investing all of your money into this. But as a sponsor, you never want to be in a position where you're taking anybody's last dollar because if you're a good sponsor, you know that there's inherent risk. So anytime an investor shares something like that with me, I immediately tell them like, hey, I appreciate that you believe in me this much. I really do, but there's risk involved and this is just more risk than I would feel comfortable with. And then I always send them back to their CPAs, their lawyers, their financial advisors, because I want sign off from someone who is a fiduciary to them and understands their overall investment picture and can help them make good decisions for their portfolio because I'm after the
Mhm.
long-term relationship, not the short-term relationship. So this is
Right.
my very long-winded way of saying yes, it is much harder, but it's also a higher responsibility in this part of the market cycle than ever.
What have you guys changed outside of obviously getting higher commitments, right? Like, what have you changed about your raising process to ensure that you're able to close the deals that you're putting under contract?
So a lot of times we will backstop, or we have a family office that'll backstop any of our shortfall. As far as processes go, right? We now have much better reporting and communication standards. We've been able to implement a lot more automation around it. We also really pride ourselves, and I think what we do differently, honestly, is our communication level. We
Mhm.
communicate with our investors. If things aren't going well, like we totally follow the mantra of deliver good news fast and bad news faster. And
Mhm.
we don't hide behind our computers or our lawyers or whatever. When we had to pause distributions on an asset, for example, we picked up the phone and called every single investor to have that conversation. Now, We don't always reach every investor, but we do attempt to call and communicate with every single investor in our capital stack.
Hmm. Gotcha. And have you guys done anything to like add more investors to your network since you're needing to get more commitments in order to do, or how
Yes.
are you thinking about that? Yeah.
Yeah. So there was a brief period of time where we would spend ad dollars moving people into our, ecosystem, our funnel, our trainings, whatever. Now, when we're raising capital for deals, what we're actually doing, one overlooked area for investors, is getting referrals from your existing happy investors. So what I do, right, is if I have an investor that's invested in 7 deals with me, right,
Mhm.
like she's been around, she knows how I am, she's happy, she understands the risk, she understands what's going on. And let's say that she is a hand surgeon. Okay, I'm making this up.
Mhm.
But let's say she's a hand surgeon. Well, I might come back to her and say, hey, Dr. Susie, we've had such a good working relationship and you've made a lot of money with us. I was wondering if there's anyone else in your network that would be interested in looking at investing. I think this could be a really great way for them to have tax efficiency, get double digit returns, whatever, right? And
Mhm.
then I always offer to set up a free, like 1 hour. It can either be a training, a coaching, a consulting, exclusive for her and her friend group. So, do you remember like back in the 80s and 90s, people used to throw like Tupperware parties and everyone would go and like learn about Tupperware? And now there's like a Botox party, right? Where you can go and get all your fillers and Botox at a party. It's kind of like that. I throw an investing party and it's just a Zoom call, but
Yeah.
now having a good investor like Dr. Susie, well, now I can have 20 Dr. Susies. And
Mhm.
she's providing me credibility. She's vouching for me because she's worked with me, had a good experience with me. And I think that's overlooked by a lot of people. A lot of people don't go to their existing network and ask for referrals in. They wait for investors to be proactive. And investors don't care about you closing your deal as much as you care about you closing your deal.
Mhm. Yeah. Interesting. Okay. Now, you've obviously been in the business, I think you said since 2012 was multifamily or 2012. So I know there were some challenges in the first deal. What are maybe one or two other big lessons that you've learned along the way that allow you to operate at the level you operate now?
We could stay here for 1 year and I would not be done telling you all of the lessons. So high level, right? I
Sure.
think a lot of people, when they go into multifamily, especially if they're transitioning from single family or even like a W-2, they think that they have to do this alone. And that could not be further from the truth. Multifamily is very much a team sport, more so than single family. Like I can go out and buy a single family home all by myself like in the next hour, right? Multifamily does not work that way. There are a
Mhm.
lot of moving pieces. So I talk about like this 3 pillar framework. So there's like the triangle of the people you need in multifamily. You have your acquisitions person. So the person who targets the deal, underwrites, negotiates, does due diligence, et cetera.
Mhm.
That's your acquisitions person. Then you have your capital structure, right? Your equity partner. So who's
Mhm.
raising the capital, bringing the debt? How is that being divided? How is that being split up? And then the
Mhm.
third problem is what happens after we close the deal, right? We need the operational partner who can execute on the business plan and deliver to investors the value that we have showed them
Mhm.
that we could deliver. And so when you have those 3 players, and it doesn't have to be 3 people, it could be one person doing all of it with a hired team. It could be 2 different partners that divvy it up. It could be 3 partners. It could be 5 partners.
Mhm.
But you don't have to go it alone. So that's the most important thing. The second
Mhm.
thing, and this is actually the biggest mistake that I made when I first started, is there were so many people that had like programs and courses and like VIP events and conferences and mentoring and whatever, all these things. And I always looked at it as if I was smarter than the people that had been doing it for a million years because I was like, oh, I don't need to pay somebody 20 grand, 50 grand, whatever it is to learn this. I can go on YouTube University and learn all this. I can learn from the School of Google. And I was right. I could learn that. I did learn what NOI means. I did learn what fair market value. Like I learned all of those things. And now it's even easier to do that with ChatGPT, right? It's information is at our fingertips. What I didn't realize at the time was that behind those paywalls, you're not paying to learn what NOI is. Everybody will tell you that that's available for free, right? Like it's available on my Instagram. I put this
Mhm,
education out there. What the paywall is actually for is to get people that are not serious out of your way, to get the noise out, to get the
mhm,
just filler tire kickers out of the actual room that we're functioning in. And
mhm,
now I'm in those rooms because I'm invited into them, right? I speak at a lot of these events, I train at a lot of these events, I coach, I provide value to events like this, I run masterminds. And what I know now after being in all of those rooms, I've been in every high level multifamily room that you could probably dream of at this point. And
mhm,
it is so clear to me now, a decade plus later, that what I would have been paying for was speed, clarity, partnership, because the people who also invested in themselves and their own mindset are behind those paywalls too. So those are
mhm,
all the people you want to work with. You don't want to work with the people who aren't willing to do extremely painful things to make this successful. Because if
mhm,
they're not willing to do that and bet on themselves, you shouldn't bet on them either. You should only bet on the people who are willing to bet on themselves. And I didn't know that I was the person unwilling to bet on myself early on. And had I done that, I probably could have scaled to $1 billion way faster. I probably
mhm,
could have done more at the height of the market that I didn't do. I probably could have taken advantage of more opportunities that I couldn't even see as opportunities. I could have met other partners, better partners faster. I could have learned new techniques, new skills, new strategies better. You have to be in the rooms where people who are actually operating at the level that you want to operate at or
mhm,
higher are operating. So you always want to be looking up and reaching up, not down. And so you always
mhm.
want to be the dumbest person in a room. And those paywalls make sure that you are not the smartest individual in that room.
Sure. Of those 3 areas, like, of the multifamily business, what's the area that you specialize in?
Capital.
Wow.
So I do mostly the capital raise. I do some of the due diligence. I hate operating. I can and I will, but I hate it. But
Mm,
I like due diligence to some extent. But capital structure and compliance are the two areas where I manage more of our partnership. And then my
mhm.
JV partner, Ellie Perlman, she handles she does a lot more of the acquisition and she handles the operational side, and she's a phenomenal operator. I don't want to get in her way at all.
What do you think in, like, a challenging market makes someone like her a phenomenal operator?
She is the most precise sniper I've ever seen. So, what she's really good at is understanding the outcome that we need. So, let's say we need to increase NOI by 12%. Okay. She is going to look at that and go, okay, we can pull lever A, B, C, D, and this is what's going to happen. But if we pull lever A, then we need to also pull lever C. And she's so good about making sure that we're pulling the right levers at the right time to ensure success. So, like, she has a vision. She can break it down into the perfect micro steps. She can also arrange like who needs to do what. And then
Mm,
she can create and implement systems and processes to get us there. And she's so precise. It is, and she gets underestimated because she's this like beautiful woman who is smart and well spoken, and she just gets underestimated because this is primarily a male dominated field. And so they think she's
mm.
like the secretary or the analyst or the admin. But in reality, she's like one of the best operators I've ever come across, if not the best.
And you and I were talking a bit offline about how a lot of your leadership or executive team are women or is made up of women.
Yeah.
Do you wanna talk more
Yeah.
about that and the changes you were saying you see coming in the industry?
Yeah, so this is one of my favorite topics to talk about. It's no secret that the private equity space is not filled with people that look like me, right? There's not any women really, and there's definitely not minorities. So I'm an anomaly when I walk into these rooms and sit at these tables. Now, what I think the conversation we need to be having as, fund managers and as money managers go is the great wealth transfer is already underway.
Mm,
$124 trillion is set to change hands. Of that $120 trillion, $100 trillion is going to go toward women. And this is
mhm,
the first time in the history of the earth that women have controlled this much money. And I think it's really
mhm,
important for all of us to understand that because women spend money and invest money differently than men do. So, for
mm,
example, 85% of household giving in the US is influenced by women. Women care more about investing into sustainable investments and projects. They care more about investing for community versus just for themselves making a paycheck. And so when we understand that women's priorities with investments are different and the way women think about money and talk about money is different than the way men have traditionally done it, I think that that's a really big superpower that we can then utilize to make sure that our investments are geared toward the people that have the money, which now is going to be women. By 2030,
mhm,
two-thirds of American households, the money will be controlled by women. So women
mhm,
have never had this access to money. And baby boomer women are inheriting $40 trillion. Baby boomer women have never controlled this amount of money. And I
mhm,
think one of the best examples we see of what women do with money differently than men is when we look at Mackenzie Scott and Jeff Bezos, right? Jeff Bezos
mhm,
has invested in things like taking people to Mars and the moon, right? Whereas Mackenzie Scott has invested into education. She's one of the largest donors to HBCUs. So she cares a lot about diversity, the next generation, education, the arts, sustainability, things that provide for generations to come, not just for herself or her family or whatever she's interested in. Same with, I think Alice Walton actually just set up a entire medical school infrastructure where there's no tuition to train doctors, which
mhm,
there's a big shortage of doctors. And so she's using her wealth in a way that is, also sustainable and community oriented and taking care of others. So I think it's just really important that we have the conversation about how women look at money, how women think about money, and how women invest money, because it is going to change how we talk to our retail investors because now women are making decisions. So if I see a company as an investor, right? I'm an angel investor, I sit on a lot of cap tables. And when I invest, my very first question I ask today is show me your C suite or show me your decision making suite and above. I don't care if it's your board of directors, your C suite, your operation director, managers, whatever. I want to see that because if I don't see women and I don't see minorities, then that tells me that you didn't try very hard to work with the best. And if you didn't try very hard to work with the best, I'm not interested in the second best. I'm not interested in mediocrity. I'm interested in having the best team work my money to deliver me a return. So I don't even invest in companies that have no diversity because I think they're too weak.
mhm. Gotcha.
So
Another, yeah, you're still here. Another thing we were talking about offline was, mindset coaching and how much
yes.
difference that that has made for you. You wanna talk more about that?
Yes, this is like my favorite topic. I about 2.5 years ago, I started coaching with a woman by the name of Rosie Noel.
Mhm,
Oh my gosh, she has completely changed my life in ways I did not think was possible. So before I started coaching with her, I used to think like mindset work was like woo and like it was like kind of crazy. And I'm like, all right, wear your tinfoil hat and manifest. Or like I was the naysayer. I'm the type of
mhm,
person like I need scientific data before I'm willing to invest in
mhm,
anything, believe or follow something, right? So there is a assessment called the Clifton Strengths Assessment. I don't know if you've done it. If
No?
you have not, this will change your whole life. So I did mine back in 2018 before I started coaching with Rosie. And she's certified in Clifton Strengths. And this is my favorite personality assessment because it's backed by Gallup. So it's a multi-billion-dollar company that backs it. And it's actually backed by research and data. Unlike the Myers-Briggs test or like all of these other assessments, they have some fundamental flaws or they don't have the data or science to back it up. So the
Hmm.
Clifton Strengths is like by far my favorite tool to use. And you take it one time after you turn 19. You don't have to take it again. You just take it one time, unless you have some kind of like major life event or trauma that happens, then maybe you can retake it. But Clifton actually says you only take it one time and you don't need to take it again. The cool thing about it is once you start spending time in your Clifton Strengths report, you start noticing patterns and you can start naming when certain things are coming up in real time and you can pivot and you can adjust. And the more time you spend in your Clifton Strengths, the more you get out of it. So Rosie
Hmm.
is a certified Clifton Strengths coach. She's also a high performance coach. So she's used to coaching like the C-suite of BP, the C-suite of 3M, the C-suite of all of these major companies, right? That's who she coaches. Now she consults and she has her own coaching company. So I get to benefit from it. She doesn't only do corporate. And when I started mindset coaching with her, I started coaching with her 5 days a week. Every morning, I would
Okay.
wake up and start my day with her every day. And honestly, if I could still do that today, I would, but like, she has other clients, blah, blah, blah. I hate it. I hate that she has other clients. I want to be her only client. I want her to just mindset coach me all day long. Because when you do your mindset coaching, right, like the hardest real estate you're ever going to manage is the 6 inches here,
Mhm.
right? It's the hardest real estate. And when you can manage this more effectively, I can manage my physical real estate better. I can show up as a better leader, a better team player, a better sister, a better mother, a better wife, a better daughter, a better friend, a better cousin. Like all facets of my life improve when my mindset is being actively worked on and I'm actively growing. And it just takes away the vulnerability of your weaknesses or the things that you don't do as well. But it also encourages your strengths to shine, and that becomes your superpower. And working with someone like Rosie helps me turn it on into a superpower and then just elevate it in a positive way from a place of abundance versus a place of scarcity. And that's the
Mm.
thing about strengths is your strengths could actually show up as weaknesses if you don't manage them and you're not paying attention to them. They can show up as weaknesses and really hinder you and hurt you. So it's like the weakness and the strength are two
Mhm.
sides of the same coin, and you have to be intentional about making sure you're showing up in a positive and abundant way versus a scarce or a negative way.
Yeah. Talk more about that. You said that twice in there, showing up and acting as like from abundance as opposed to acting from scarcity, even if you're acting in the same way.
Yeah, it's the mindset behind it. So I'll give you a really easy example, right? My number one Clifton strength. So what Clifton strength says is there are 34 talents that every single person on the face of the planet has. It's just we have them in different orders, right? So mine and my husband's are basically exactly opposite of each other. He is the yin to my yang, right? My top strength is competition. So what that means is every single thing I do, no matter what, I'm always my first thought is through the lens of competition. Like I want to win, I want to be the best, I want to be right. And when I was showing up like in my 20s, for example, and my competition was showing up in a negative way, it might have been where, let's say, you were bringing me a deal to work on together, and then my
Mhm.
competition's on, it's always going to be on. But when I wasn't managing it and it was coming from a place of scarcity, you might have said, hey, I have this deal I'm working on. I need help. Can you send me your due diligence checklist? Right.
Mhm.
Vina 10 years ago, 20 years ago would have been like, Mike, absolutely not. I worked so hard on this. If I give it to you, then you might be better than me and you might be able to take my investment or you might be able to do more or you might win. right? So I shut down, I say no because my competition is preventing me from doing it. Working with
Mm,
Rosie, what I've done now is we've shifted my mindset of what winning actually means. So
mm,
now, if you approach me and you're like, "Hey, can I have your due diligence checklist?" I'd be like, "Yeah, tell me more. Like, what do you need? Can I help with something else? Is there something else I've learned that I can now pass on to you?" Because now I can show up competitive from a place of abundance where I go, if I can help Mike win, then that means he's going to help me win at some point, or maybe we can do it together and then we can win together. So now my definition of winning has completely changed, and my competition is still there. It's still strong, it's still showing up. But at the
mhm.
same time, I'm now not competing against you, I'm competing with you from a place of abundance.
So, how did you take I mean, obviously Rosie helped you, but how were you able to change that definition in your mind so that you were able to make that shift in an example like that?
Yeah, so that's where doing the mindset work really helps, right? So the
Mhm,
first thing is identifying it, right? Like, so Rosie teaches this framework of name it, aim, or wait, is it name it, claim it, and aim it. Okay, so I can name it. I can say, okay, Vina, this is competitive. And I'm a
mhm,
competitive person. Sam, I used to have a lot of shame around it because people would make it seem like a bad thing that I want to win. Like, oh, you
mhm,
should be more humble, you should be more low key. And they try to like dim that. You cannot dim that in someone whose number one strength is competition, right? So I had a lot of shame around it. She helped me overcome the shame and start viewing it in a positive light. And
mhm,
then name it, you know what it is, you claim it, you say, "Yep, this is me. It gave me permission to be competitive and to feel good about being competitive." It's not a weakness, it's not a negativity to be competitive. It's how you're competitive that matters. And then now I
mhm,
can aim, right? So I've done so much work in my Clifton strengths now. My number 2 is communication. My number 3 is winning others over. So for me, I'm a people person, right? I want to meet people. I want to get to know their life story. I want to dig in deep. I want to win them over. I want to communicate effectively. And that makes me feel like I've won. And so
mhm,
now I can actively bring out strength. So in real time now, because I can name it and I can see it when it happens, because I look at different scenarios so many times where it came out negatively versus positively. I analyze them. And then now in real time, I can go, oh, wait, Vina, this is triggering negative emotions for you because you're showing up in scarcity and that's not how you've trained your brain to think. So we
mhm,
need to reconsider, is this competition worth winning? I used to be someone that's like, win at all costs. Now I'm
mhm,
like, is this actually a win if it's at all costs? Maybe that's actually a loss if it's at all costs.
mhm.
Now, I say that, and I'm still prepared to lose every single friend I have over a family board game. I have no issues beating people at board games, and I'm never going to stop doing that. But that's an example of it being negative, but I'm never going to stop.
Yeah, sure. Interesting. So, like, you go into that kind of, I guess, the results from your tests, and you're able to go through each trait. How do you I
Yep.
mean, those are, like, your top strengths, so how does she suggest that you look at, like, the ones that are maybe 32, 33, 34, which I
Yeah.
guess would be, like, your least strengths or your weaknesses? Like, how do you
Yeah.
handle those?
Okay, yeah. So the top 10 strengths, they're always on. Like I
Yeah.
always like even right this second I have my competition on, I can't turn it off. Then the next like 5 to 7, like your top
Mhm,
half really, are the ones that your secondary strengths. So number 11 through like 17ish are secondary strengths, meaning you have those talents, you can pull them out if you need to, but you might not always have them on like your top 10.
mhm,
Then your bottom 10, it does like I'm low deliberative. Number 34 is deliberative. So I am not a
mhm,
person that is going to sit there and be like, okay, should we do this or should we do that? And is this the right? Like, I'm not going to do that. I'm going to get information, make a decision, and move forward because
mhm.
I like speed, right? I lead with all of the ones that are basically impatient, right? Like I want to move as fast as possible.
Yeah.
doesn't mean I'm unable to deliberate. It just means that it's never going to be like my first, second, third, fourth, or fifth thought to
Hmm.
naturally this way. So, because I'm low deliberation, I know that one of my pitfalls is that I might not get all the information I need to make a good decision. And I might think I have enough to make the decision I'm making, and I probably don't. And my competition wants me to win. So, I can utilize other strengths in my top 10 to get over that. So, it's about building strategies around your strengths to overcome your lesser strengths if you need those skills. I'm also low harmony, right? So I'm low harmony, meaning I'm not going to, my husband's high harmony, which works really well in my favor, by the way. Because it means like, happy wife, happy life is a real thing for him. For
Yeah.
me, I never think about like, how can I restore the harmony to the relationship and the environment? And that's what's going to feed my soul. I'm like, no, are we the best? Are we winning the most? Are we doing the most? That's what I care about. So for me, while I might not be high harmony, my strategy might be to get everybody working toward a common goal because I'm really good at influencing people and persuading them. So that's how I establish harmony, but it's not from a place of harmony. It's from a place of winning others over and communicating effectively to do that and making sure I'm high maximizer. So making sure we're getting the best of everything that we can get. So there's strategies you can build from your strengths. So there's no good or bad profile, even though as number one competition, I really have to believe that there is a best profile.
Yeah.
But Rosie says that there's not, and everybody is valuable.
Gotcha. So the idea is you're able to take those things that are in your top strengths and then kind of use them to accomplish what you're looking to accomplish, but like maybe even accomplish the ones that are your weaknesses, right? But approach it in a kind of a different way.
Exactly. You just learn how to double down on your strengths and like kind of forget about your weaknesses because I don't really need to be high deliberative. What I need to do is instead focus on my strengths and use them in a way that gets the same job done that I need done.
Yeah. Yeah. What other stuff have you done on the mindset side of things?
Yeah, so okay, can I recommend a book? My one of my favorite actually I have two favorite books. Okay,
Yep.
the first favorite book is like a total basic and classic called Mindset by Carol Dweck. It is an awesome read. I've read it multiple times now, and it talks about the difference between leading from scarcity versus abundance and how we can do this work and like how mindset actually works. The second book, and I'm actually reading it for the second time in less than a year. It's so good. It's by Adam Grant. It's called Think Again. And
Mhm.
it is basically a book talking about how when you are an expert in something, right? And at this point, most people would call me an expert in multifamily and capital strategy, right? So when you are an expert and you are so ingrained and well versed in your subject matter expertise, what can happen to us is we kind of get blindsided or hurt from making assumptions based off of
Mhm.
our gut instincts or based off of the way that we've always done it. And I always say the most dangerous sentence in the English language is that's the way it's always been done. Because it assumes that there's no better way to do it, right? That there is no innovation, there's no new strategy, new tools, new templates, new processes that we can use. So even now, like one of the things that I do because of this book is I never call anything that we do best practices, period. I always
Mhm.
say current best practices or the most recent best practice because the way we do it now might not be the best way. We don't know yet. So you have to always be willing to rethink the assumptions that you have as an expert and be willing to revisit what you believe to be true and be open to being wrong about it so that you can make better decisions and you can pivot differently should you need to, or you can get feedback faster and implement it faster. So it's all about like thinking again and getting into feedback loops that are positive feedback loops, not negative feedback loops. It's such a great book.
What's an example of maybe something that has come up for you that you did
Yeah.
think about it again and there was a better way to do it maybe in the last year?
Oh
I mean,
gosh.
a lot. Because it's one that comes to mind.
Yeah,
Yeah.
there's a million that come to mind. I would say the most important one to me right now is actually
Mhm.
around like parenting my kids and
Okay.
how I parent them. So I have twin 6 year olds. They're going on 26. They know everything. I'm so out of my league here. And any of the parents listening, I don't know how people do this and know that they're getting it right because I constantly feel like I'm messing them up.
Mhm.
Um, but one of the things that, like, when we were parented, right? Like, I'm 39, I'll be 40 next year. So I grew up, mid 80s, early 90s, and it was a different environment, right? Like, children should be seen, not heard, and you don't ask questions and you don't talk back. But now I'm challenging the ideals that society has shaped
Mhm.
by saying, like, wait a second, maybe if I negotiate with my kids and argue, and I argue with my kids all the time. Sometimes we'll be sitting there and they'll be like coloring. I'll be like, hey, do you want to debate? And they'll be like, what does debate mean? I'll be like, it means to argue. Do you want to argue with mama? And they're like, wait, what? And I'm like, yeah, let's argue about something. And this is actually a comment that I got from a mentee that I work with. Her name is Isa Fidelino, and she's 25, and she'll come and like stay at my house for a week or two. And she's part of our family at this point. But I started off by mentoring her. And one of the observations she gave me, because she's Filipina, so she comes from an Asian household as well. And she goes,
Mhm.
your family is so different. And I said, what do you mean? And she said, arguments and debate is almost like expected in your family. It is not a
Mm.
sign of disrespect, it is not a sign of weakness, it's not a sign of disdain or conflict. It's just a sign of growth for and safe growth for everybody. She's like, when your
Mm.
parents say something to you, you don't just accept it at face value if you don't understand it or agree with it. And she said you freely push back on your parents. And that's what I want to do with my kids too, because if they can push back against me and question things with me, then they can do that with anybody, because I don't want them to be children or adults that just are compliant without understanding what or why they're being compliant. So I encourage them to always ask questions, to challenge authority respectfully, right? There's a kind way and a right way to do it, but they can always ask questions. And I always take the time to explain, like, if I had a dime for every question that I have to answer from my children, I would be richer than any other person on the face of the planet. That's how many questions I ask. But it's curiosity, right? And curiosity, and it's part of the book Mindset from Carol Dweck, is curiosity is one of the cornerstones for abundant thinking, because curiosity allows us to grow and learn more and understand more. And that allows us to expand our mind, which means we can come from abundance.
What made you decide to like think again about that and shift your perspective versus the way that maybe you were raised?
Honestly, having kids has been my most important life's work.
Mhm.
And I didn't know how much I would love having kids and being a mom.
Mhm.
And because I love my kids, like, I can't even verbalize the intensity of love I have toward them. It makes me want to show up as the best example for them, as the best mother for them. And I know that they're watching everything I do. I know that whether they're telling me or not, they are learning, they're picking up how I'm
Mhm.
acting, how I show up. Do I talk to people with respect? And do I treat their dad with respect and integrity? Does their dad treat me with respect and integrity? Like, all of those things matter, because as much as I
Mhm.
tell them something, they're watching what we do,
Mhm.
and that's teaching them more. So for me, it was wanting to show up as the best possible version for my children that had me investing more and more into my own mindset so that I could pass that on to them.
Gotcha. Well, we're getting close to the end here, and there's always two questions for real estate
Yes.
people that I ask at the end of the show.
Yeah.
Uh, First one is, what is the craziest or most uncomfortable situation that you have ever experienced in a real estate deal?
Oh, I have so many. Um, okay, I'll tell you an interesting story. So I had a deal. Actually, it was in Florida, not Jacksonville. It was in Orlando, And we maybe had owned it for like a year or two at this point. And all of a sudden, I get a DM on social media, and it is from one of my residents at the property. And she
Mm,
goes, I think you own 123 Main Street apartments. And I wanted to reach out because I think you should know how horribly your staff is treating me. And like, basically, she goes into all of these allegations of discrimination, which is a very serious insinuation to make in general. And
mm,
then even more so because she's saying that she feels like she's being discriminated against because she is she's married to or partnered with a woman, right? And
mhm,
so she's like, I think we're facing negativity because of me being in a lesbian relationship instead of a heterosexual one. And I said, okay, well, obviously that's not acceptable for me, or maybe it's not obvious to you, but it's not acceptable for me.
mhm,
Tell me, give me more details and information. So she starts telling me like, oh, my garbage disposal has been broken for 2 weeks and blah, blah, all this stuff. And I'm like, okay. And then tell me exactly how you reached out to me. Like, why did it lead you to me? Like, what happened there? Because we have
mhm,
processes. None of our entities are owned in my name. They're all owned in anonymous vehicles. So I was surprised she was able to find my name. It
mhm,
turns out her wife, spouse, partner, whatever, um, is a detective and used her work resources to look into the owners, and then
mhm,
went to social media to find me to then alert me to this problem. And it turned out the whole entire time, like, we keep extensive records on property, especially if there's conflict with a tenant. Well, it turns out that they were violating their lease. They were repeat violators of their lease. And so, anyway, it became this whole big thing. We obviously did sensitivity training again. I no longer own that asset anymore, but it was so jarring when you
huh,
have a resident that's like finding you on social media and reaching out to you. And it's the reason I don't put my kids' faces on social media, because
sure.
I'm too accessible and I'm too public for, my children didn't sign up for it, so I don't show their faces. But yeah, that was a wild story. It was very uncomfortable, to say the very least.
Sure. Yeah. So the final question I always ask is, for the newer people listening to the show, maybe newer to real estate, if you
Yeah.
could go back in time, give yourself one piece of advice when you were looking for that first real estate deal,
Yeah.
knowing what you know now, what would you tell
Yeah.
yourself?
Mm, two things. One is go find Rosie and pay her all the money to have her coach you 5 days a week.
Mm,
Being a little flippant, but honestly, a lot of people underestimate the value of investing into mindset because it is expensive, right? It's like, I don't know what she even charges, like $1,000, $700, something like that. It's expensive for 1 hour, but it's not expensive when you look at how much ROI I get from it. It is worth every penny to me to show up as a better mother alone, that's enough
mhm,
value. When all the other things happen, totally worth it. So that's
mhm,
number one, is go find you a mindset coach. If it's not Rosie, find another one. There's a million coaches out there.
mhm,
I like Rosie because she's high performance and she coaches like all of the biggest names in real estate. Like all of the big names that you're thinking of, she's probably coached with them at some point and you just don't know it. So she's like the unofficial real estate coach's coach, right? So that's number one. But number two, find the community that you are doing the things you want to do and figure out how to be in that community, whether you have to serve your way in or pay your way in or connect with the people in that community so that you can get in. It doesn't matter. Find out what that community is, whichever one it is. Like, your community might feel different than my community, and that's okay. There's
mhm,
multiple versions that exist. There's something for everyone. Find someone that is going to give you good information, legal information. I cannot emphasize that enough. And who is going to actively take an interest in what you are doing and is going to give you good information and build that goodwill and that community where you can grow with other people. You can find your partners in there, you can get all your information, your templates, your downloads, like all those things. That's the easy button. That's the
mhm.
fast, is paying, cut the check. I wish I would have done that. I didn't. I'm dumb. you don't have to be like me. You guys can be smart and just cut the check and get into those rooms as quickly as possible. Because this moment is probably the biggest opportunity we have in our entire lives is at this point of the market cycle, more than we've ever had in my lifetime for sure. And we might never get this opportunity again. So you have to move in with swiftness, with diligence, um, be confident in who you are and who you're working with, and make sure you really trust the teams around you, and then just go at 100 miles an hour.
Yeah. Well, I think that's great advice. Vina, if people want to reach out to you after the show, maybe they have some questions, maybe they're interested in investing in some of your deals, how can they go about reaching out to you?
Yeah, so I'm really good on Instagram. I am on Instagram as Veena Jetty, VEENAJETTI. I'm on all the socials, but I only respond to my own DMs on Instagram. It's the only place in my whole ecosystem that you'll catch me personally. And also, just as a side note, I'm never going to ask you to send me Bitcoin as an investment strategy. Those are scammers. Please don't do that. I've had many people tell me that they have invested with me by sending me Bitcoin. And I'm like, no, that's not me. Thousands and thousands of stupid tax have been paid in this way. So I'm not going to ask you for investment over Instagram. Any investments that you do with me will be through proper channels with legal documentation and paperwork.
Fair enough. Great disclaimer. Well, Vina, thank you for being on the show. This is great.
Thank you. Thank you for having me, Mike.